Hi everyone, hope you're all doing well, and today we're going to talk about National Express stock. A lot of you guys over the last kind of month really have asked for a bit of an update in National Express and a few things that are kind of going on with the company and just my thoughts in general, as I am a National Express shareholder. So for you guys that asked for it, hopefully this video is useful, and hopefully the first time for a while on one of my videos this week that I actually sound a bit better. I don't know if any of you guys have noticed in the last kind of couple of videos, but just been a little bit like ugh, and yeah, not been feeling too great, but today is the first time for a couple of days that I feel a lot better, so hopefully it sounds it and I look a bit better, and there's a little bit more energy there. So yeah, just on a off side topic I guess really, but yeah, if you're on the Patreon as well, do go check this video out. It was Boohoo versus ASOS and we did do a bit of a number crunch on it, so yeah, if you are a Patreon member, do go check that video out as well, and if you do want to join, link is in the description. But yeah, today we're going to talk about National Express stock. Like I said, a lot of you guys have asked for it. I generally don't talk too much like about individual stocks that much, because I'll be honest with you, like if I just go like National Express stock update, which this is probably going to be called, the views are just terrible at the moment. Like unless, and it's, I guess a lot of people aren't really watching stock videos I guess as much as they were doing a while ago, but as well as that, like YouTube in general is just a lot more like clickbaity and clickbaity thumbnails and clickbaity titles, so like actually mention the stock doesn't like bring people in, less views, and yeah, obviously it's the more dramatic subjects that bring views in, like, you know, what you've seen a lot this week, which is like, oh, the stock market is crashing, when literally we've just recovered it in like the last 3 days, which is a little bit gutting to see. But yeah, I mean, it's just one of those, it's like it's a bit of a tricky situation where we're in a point of view now where that's the way it's at, and yeah, like I said, the views normally when I do these sort of videos are not great, but hopefully this one is, because it's been requested a lot, and I don't really want to become, you know, like a too clickbaity person I guess anyway. So yeah, hopefully the views are good, and also if you're here and appreciate the non-clickbaitiness, hit the like button as well. But we'll get started. So first of all, I guess like my backstory with National Express, I guess I think I'm up about 70 or 80% on this one right now. I started buying I think around June or July time, so I'm guessing it probably would have been somewhere around here that I entered the stock. Obviously it had the CV drop, it bounced up and then it dipped down again, and when we got around to this time I was like, that's when I decided to buy it, and then since then obviously it's done very well. But I guess everyone's kind of looking at National Express at the moment because it's done this, boom, it's fallen off a cliff, and I like that. I like the fact that people are going, you know, I try and drill it in so much on the channel, is like, when stocks go down, they are the buying opportunities. When stocks go up, those are the times to stop buying and potentially sell, you know, and that's what I always try say so much on the channel. And it's really good to see people like looking at this now and going, oh, you know, National Express is down. I think if I can go on the peak, wherever the peak is, I think it's like down 30%. But I guess people are looking at this one now and going, oh, the stock's down 30% from 52 highs. Is this a chance to go buy this company? And that's really good to see. People are like looking as well. People are looking at the stock chart at the moment, and if you look at the company, it's been on the stock market for a very long time. Obviously it was doing very well, and then we had the Great Recession here. You can see it falling off a cliff, but you can see here, you know, it's always done it's a very steady stock that carries on going up, and then boom, you know, the CV recession, and people are now looking, going, you know, that's where it was at, £4.76. It's £2.34 now. You know, is this a chance to go buy, which is really good. The thing to point out here is that it is, as you can see, it's not a stock that, you know, over the course of nearly 10 years, 424%, you know, it's still pretty good. But it's, you know, it is a bit more of a steadier stock, you know. It's a stock that won't bring in like 100% return every year or stuff like that. You know, it will generally, you know, if we go from like 2017 or yeah, about there, you know, 29% in 2 years. Like this stock will, you know, only be a steady away company. It's not like a crazy shoot up company. The only time you'll ever see a company like, if you invest in a company like this, the only time you'll get like shoot up hundreds of percent is if you buy peak, like dip of a crash. So this, if you got in here, these are the times where you potentially get a, you know, like 400-500% return on that. But if you're looking to buy now, it is probably important to say that, you know, that you probably won't get that. You need to be at peak recession to get that. But from this point here though, is this still a steady away company that will put in very good returns? And I think that's what people are thinking. I just want a steady return stock, you know, goes up in the background, very good run, could potentially come back to a dividend at some point, and I think that's what everyone's kind of considering here anyway. So Recently, the recent earnings, obviously, they've been affected by CV. In case you don't know what National Express is, they do transport. Obviously, transport's been a lot more limited recently over the last kind of year and a half. They operate not just in the UK, a lot of countries, and they operate bus, coach, train, and tram services as well. So as you can imagine, there's a lot less travel. So this company's been hurt. But when we think further down the line, 2, 3, 4, 5 years, you'd expect them to kind of everything to kind of get back to normality or where it was previously. Going on recent earnings that did come out, revenue was pretty much flat as you expected. If we go from the start of so far 2021, there's been a few lockdowns still, a few restrictions still. So by the time we get to the back end of the year, these numbers could be a bit better. That's if cases don't shoot up in winter. So it looks like we are kind of past the worst of it now. So yeah, there's not much change there, and like I said, we've had a lockdown still. But the big difference as well is like they're not burning through any cash anymore, which is great. So if you go on the operating profit, massive change around underlying profit before tax. Same again, gone from 60 million to 0.1 million, and then underlying EPS, you can see it's a loss. So they are still, after tax, they are still losing a bit of money, but they're not losing nearly 60 million. So they're not burning through the cash now, which is a really good thing. A lot of companies in this sort of position that are in the travel space, a lot of these companies are like burning through a lot of cash, and with National Express you don't really get that, which is great. So even if if it doesn't recover as quick as what we think it's going to recover, because we think we're kind of towards the back end of it now, if things kind of get worse again in winter, then it's not too bad, because you'd think this company won't burn through the cash and you won't have like an EasyJet situation, for example. Now, funny enough, Simple Wall Street actually had this company as 52% undervalued, which is interesting. And if we actually go on the past growth, you will see here this company is a very well run company. The previous revenue growth has been very good, and they've also grown profit at a very good rate. Pre-CV, this was a solid company, good revenue growth, good profit growth, and those are the sort of companies that you want to be buying, good profit and revenue growth, because that's where the share price goes. If you have a good revenue and profit growth, the share price moves in the right direction at some point, and you've seen that with National Express stock. Now, obviously, you see the dip in the CV. Now, the funny thing is if it wasn't for the CV situation, National Express actually put in like record revenue and profit growth. So if it wasn't for the CV, this drop off here, you would have still seen it going up and up and up, which is obviously really good. And in that time as well, they've won a lot of really good contracts. And the thing is we've not really seen those contracts come into the financial, because then the CV situation happened. But past performance wise, this company has been very solid, and when it gets to normality, once again, it'll be very strong on the profit and the revenue growth. Balance sheet is pretty much what you'd think with these sort of companies. They have to buy a lot of trains, a lot of buses, so very much a lot of these travel stocks always have a bit debt heavy balance sheets, but they're still pretty strong on the cash to debt. And obviously they're not going to burn through the cash anymore, which is great. It was a company that used to pay a dividend, and they might go back to paying a dividend, probably, I would not say this year, maybe next year. So something to consider further down the line is that you may get a dividend from the stock, which may be like a 2-3%, which would be very healthy. Like I said, this is probably a stock that's a bit more of a value dividend play. So yeah, you could expect a dividend, but I don't think it'll be anytime soon. Obviously the priority is to get back to getting good profit and revenue in. I'm sure after that they'll probably pay a bit of debt down, and then I'm sure after that they'll probably then look at a dividend. So don't expect any dividends in the near future, but a bit further down the line, it's something that you might see. Worth saying that on the management side of it, there has been a change in the CEO, which has happened recently, so something to consider there. Obviously it's a different management to previously what's had the company, but they have already committed to buying a few shares as well, which is, I guess, is a very positive sign. Also going on the valuation point of view, I guess the big thing as well is where it's at now as a point of valuation. So you'll see here the industry is a 19p ratio and the market's a 23p ratio. So I actually went on their past earnings. So if they do 2019's revenue and profit again, what will actually put this company out at the moment is this company will actually be valued at a 10 price to earnings. So compared to the industry and market, that will be a little bit cheaper than the industry and market. Now, National Express doesn't normally trade at a high P ratio. Normally it does kind of trade around that below 20 range. It never trades, even though it's a very good company, it never normally goes above 20. So from a P point of view, it's okay. Like, it's not overvalued, but it's not cheap really, I guess, at the moment. So yeah, that's something to consider. Like, and obviously that's saying a 10p ratio when they do 2019's financials. At the moment, they're not doing that. They're not doing the revenue, they're not doing the profit. So this company does kind of have a little bit of yeah, it's priced okay at the moment. Sure, you have the potential that it could go up from here to a 20p ratio, which would be around obviously like a £4 stock again. Which would definitely be like the top side of the valuation. So I guess you still have some room there for it to still go up from there. And then you've got to consider that they'll have the new contracts come in and everything like that. So yeah, I mean, it could get back to a 20p ratio, but I don't think it will do that until it gets back to putting good financials in, I guess. So yeah, from that point of view, yeah, there's still a little bit of upside from the current valuation, but I think until it will, that's obviously off 2019's numbers. So it would have to get to the point where it's putting in actual decent revenue and profit again. So I mean, I don't know if you'll see that at least for probably another at least 2 years, I guess, at the moment, is what my kind of thoughts are with that one. And one little interesting story that is happening in the background is it is rumoured that National Express could actually go by Stagecoach. So yeah, there's a big rumour at the moment. Well, they have actually made a bid actually for Stagecoach. Now, the offer they did put in was about an 18% premium on Monday's close, which is pretty okay, really. Like, that's not really too much of an overpayment, because at the end of the day, you are buying a bit of a struggling company, so you shouldn't really want to pay too much of a premium on it. So yeah, 18% is about right, and National Express say that it will obviously tie up the companies very well and will save them money on depots and IT costs as well. But you look at Stagecoach's share price performance. I mean, look, it's just awful. The company's been really badly managed since 2015. It's not really a great company. So yeah, they don't want to be paying too much of a premium here for Stagecoach. So yeah, not more than 18% would be definitely a right sort of premium. And if we go on Stagecoach financials, you can see, this ties in with the share price going down. The revenue and profits just been declining on it. So yeah, I mean, it's not a big purchase that gets me really excited, to be honest with you. It's not like like Callaway Golf buying Top Golf situation at all. So it's not something I like that much. I mean, I don't blame them. In these sort of times, if you can pick up like competing businesses and make it into a benefit for your company, that's normally a really good sign from management, and they probably know what they're doing. But yeah, it's not something that I'm really excited about, I'll be honest with you. So I don't know if it will turn out to be something positive for the company. We'll see how they work it. But yeah, it's just one of those situations. I'll just leave them to it and see if they can make it work overall. But I guess to the last point, which is the point that everyone wanted me to talk about, is what are my thoughts on me buying, and what are my thoughts if anyone else wanted to buy it. So personally for me, obviously my position's been fully built on this company for a while. I'm up over like 78% on this one. In fact, at one point out like here, I was up like 130%, 140% on this company. Yeah, at the moment I have a really good average. I'm happy to hold it, and yeah, I have really no plans to buy this one. The only time I would actually buy this one is if it went maybe sub £2. Maybe then I'd consider averaging up on it. But for me, I bought this as a turnaround play. It has turned around a little bit now, but I think that what we'll see here is when the company fully recovers over the next 2 to 5 years, we'll have a share price run like this. And yeah, if like I bought peak CV situations. So yeah, this is the sort of company that if I carry on holding for like the next 2 to 5 years, I could get probably 200, 300, maybe 400% return on this one in the long term because of the average that I have in. But yeah, I bought it in peak fear, and yeah, unless it was £2, then I see bigger upside. For me, personally for me, I'm not buying. If I was on the outside and I was looking at this one, if it was a company if I wanted a company that was a bit more of a safer play, a bit of a turnaround play, a bit of a company that just carries on, this share price isn't going to be a company that goes up 200, 300, 400% from here. I think that in the next kind of 2 to 5 years, you'd probably make 100% return on this one. You might also get a little bit of a dividend, and if that's what you're kind of looking for, it's probably a good price to be buying it. But if you're wanting a bit more than that, then obviously I would say maybe not for you. But it is a good company. In the next 2 to 5 years, I see it going back above £4 for sure. But yeah, for me personally, like, I just don't want to average up, and the reason why is because I'm looking at, I see other companies that I'd just rather be buying at the moment. For me personally, do I think it's a bad investment? I think it's a really good investment. Do I think it'll go up in the next few years? Yeah, of course it'll go up in the next few years. yeah, so it's a bit of a tricky one. It depends what you're looking for, and the sort of returns you're looking for. So yeah, for some people this would be a buy, and also for me personally, like I say, maybe not at the moment unless it went lower. So hopefully that video was useful anyway. But yeah, still ultra bullish on National Express, still holding my shares, and I still plan to hold my shares for a long time. The ones that I do own, even if I aren't buying. So yeah, I hope the video was useful, guys, and I'll see you in the next one.